Market trades in the green, Nifty above 21,800 near day's high, led by HDFC Life, BPCL and Wipro, while Sensex trades above 70,000. Broader markets marginally outperform. Most sectors trade in the green, led by IT, auto and pharma. Banks underperform. And Paytm trades higher after hitting lower circuit in the last 3 sessions. Meanwhile, Jio Financial Services denies reports of buying Paytm's wallet business. And shares of Bharti Airtel trade over 2% higher on the back of positive December quarter numbers. Citi reiterates a buy call with an increased target price of 1,270. Prime Minister Narendra Modi kicks off poll campaign, says BJP will get 370 and NDA 400 seats in the upcoming Lok Sabha elections. Hello and welcome to Hot Money. I'm Hiral, Dadia. Let's quickly take a look what's happening with the markets. Clearly, we're near the day's highest levels, seeing gains of nearly 0.5% there. 21,890 is the level we're tracking in terms of Nifty 50. In fact, 21,900 is the day's high so far. You have Bank Nifty as well, which has now turned into the positive, pretty much on the borderline, but yes, in the positive, trying to strive its way upwards. HDFC Life, the top gainer, followed by our BPCL. Wipro, TCS are also doing pretty well from the IT pack, and ONGC, which is seeing some smart gains. Some bit of profit booking coming in with regards to power grid goes after the kind of surge that we saw in yesterday's session. And along with the power grid, let's just look at the other power names as well. NHPC, NTPC, SJB, and all of these were up and about in trade yesterday. Possibility that all of these are also seeing some bit of profit booking as well. Bajaj Finserv, ITC trading under pressure. Britannia will be reporting numbers, so that's a stock we're watching out for. And you have a Nestle that will be reporting numbers tomorrow, so that's another one on everyone's radar as well from the FMCG pack. But let's look at a Jupiter Wagons, an interesting name to watch out for in today's day of trade. And overall, if you go to see in terms of Jupiter Wagons as well, it's mainly on the way the Q3 numbers have panned out. Joining us on the show to discuss more with regards to the quarter is Vivek Lohia, MD at Jupiter Wagons. Vivek, firstly, good afternoon and welcome to the show. A strong set of numbers that we've seen, 82% growth in terms of profitability, margins have improved as well, and the order wins look substantial during the quarter. Is this trajectory something that you will be able to maintain going ahead?
Yeah, good afternoon. As you're aware that the government is very focused on the railway sector. And in the current budget itself, the Honorable Finance Minister announced 3 additional freight corridors. So the thrust is very clear that they want the railway pie to improve, and by 2030, the target is that railway should have at least 50% share of the entire logistics sector, which is close to about 3 billion tons of transportation annually, from currently about 1 to 1.2 billion, which railway is doing. So definitely there is a lot of tailwind in the sector, and we are seeing a lot of demand. So I don't see any reason, why this trend would not continue.
Right. So currently, at what number, or at what level has the company ended in terms of the order book at the end of the third quarter, and where do you see it moving from here on, taking into consideration the orders and contracts that you have received from Indian Railway as well as private companies? Apart from that, the recent 4,000 boxes and wagons that has come in as well, and the Defence Ministry order that we are looking at.
So our order book right now is close to about 7,000 odd crore plus. Going forward, there is already railway has in the pipeline tenders for about close to 30,000 odd wagons. Tenders for about 22,000 wagons are already out. So they are under deliberation, and we expect another 10 to 20,000 wagon orders in the very near future. So, in terms of the order size, I don't see a challenge at all. Besides this, also we are seeing the traction on the private sector continue. So whatever we are delivering every quarter, we are seeing renewed orders coming in from the private sector. And there is already a lot of private capex which is happening in the core sectors, mainly steel and cement. So that is also leading to substantial demand going forward. So for us right now, the key is on the execution part of the business, and that's where we are focused on. And this we are doing using our wagon capacity as well as through pilot.
Right. So with this, Vivek, the kind of expansion that you're looking at as well, one of the questions I have for you is, with the cost of funds currently, do you think that is something hitting the business? Is that a concern? And if so, do you think it's time to cut interest rates, taking into consideration that the RBI policy is just nearby?
Okay. So, as a company, we are pretty much a net debt-free company. So our borrowings are not anything substantial, and going forward also, since our cash flows are going to remain very strong, so we are not looking at a very large scale kind of borrowing. But again, I think for the growth momentum to continue, obviously interest rate cut is I think which is going to be a very welcome step from the sector as such and from the industry in general.
Right. So everything said and done, if you have to look at the next 3 years, what's the key milestone that Jupiter Wagon wants to achieve?
I think for us, we have earmarked on certain expansion targets in terms of our foundry capacity, getting into the wheel set manufacturing. We have certain targets, the new businesses which we have started. We have set on the braking side of the business, on the passenger rolling stock business. Again, the government has announced very grand plans towards modernizing the entire passenger rolling stock fleet. So I think going forward, that those are the areas where we are going to focus on.
Right. So I think that's the trajectory one should be watching out for as well. Thank you, Vivek, so much for joining us on the show and sharing your views. So that's with regards to Jupiter Wagons in terms of their Q3 numbers. Let me quickly welcome in Sharmila Joshi as well from sharmilajoshi.com to understand what's her view on Jupiter Wagons. Sharmila, good afternoon and welcome. A quick comment in terms of how are you looking at Jupiter Wagons and your top picks in the sector?
So, I think clearly as the management outlined, overall, I think the way the government is positioned on railways as a sector is encouraging. I think the only sort of caveat or negative that I would sort of voice at this point in time is that the stocks have seen a huge run-up. So a lot of these stocks are a little expensive from a valuation perspective. And then if the sort of sector preference doesn't stay with them, then they may not do much in this year. But I don't think, you don't need really to worry in terms of what kind of order books they have or, what that delivery process is going to be. It's just that the valuations may not be in their favor. So I think that's the only caveat. Net, I would stay positive on the sector, but it may not be the fancied sector this year.
Right, not the fancied sector this year. In fact, railway stocks did see profit booking post the budget as well. Sharmila, stay with us. We have some breaking news that we are picking up with regards to Paytm, and this is the latest update that we have so far. Promoter Vijay Shekhar Sharma did meet RBI officials yesterday. Muralidhar Swaminathan and Tamanna Inamdar join us in the studio to tell us more. Murli, what have you heard from your sources with regards to Paytm? Because that's something which is on top of our radar today as well.
Yeah, lots of things happening. Vijay Shekhar Sharma, the promoter of Paytm, sought an appointment with RBI officials. They gave him the appointment, they heard him, but they did not give in anything. That's what our sources are telling. RBI is going to do what it's going to do, and they are continuing to stay on that course. That's one part of the story. For the benefit of viewers, RBI has taken action against Paytm Bank and told them that the KYC norms have not been followed and they've been given time till the end of this month. Now that has led to a lot of confusion about how Paytm users have to shift money out of their wallet that they maintain with Paytm Bank, which is used by users, that is users of Paytm app. Now, over the last 2-3 days, there have been a lot of lobbying going on. There were reports that people can buy Paytm Bank could be bought by Jio Financial Services, and that got denied. And what I have also heard is that Paytm has approached 3 private banks. Now, all the 3 private banks, my source tells me, is that they are not entertaining any discussion at this stage because they have said that, look, we don't want to get into this mess. They want to stay clear of this at this stage because the RBI investigation or the RBI case is still on. Till then, they will not do. And of course, the second part of the story, which Tamanna has been tracking.
Yeah. Right, so this is going to be interesting on this front because 3 private banks that have been approached, and now the thing is that the banks are still thinking whether to look at a Paytm or not right now. Tamanna, at your end as well, you've been looking at a couple of, startups, etc., who have actually, looked at the letter. What are you picking up?
So I got a sense of what the intent was of this clutch of startup founders who wrote to the RBI, the Prime Minister's office, and the Finance Minister, asking for a relaxation or a review of the RBI's action. And it's quite a strong letter because it says this is having a chilling effect on the fintech space and will throttle digital innovation. So they've gone as far as equating Paytm Payments Bank with the entire fintech ecosystem. So I got a better sense of what they're trying to do. And what they're saying is that the idea is not to ask for special treatment for any fintech founder. That's not what they're asking for. What they're saying, though, is that the RBI should have the same approach to Paytm Payments Bank as they did with, say, a Yes Bank, where you've spotted a problem, but you've very quickly moved to arrest any fallout from it. So, for example, why not give someone the charge almost immediately of Paytm Payments Bank? That would avoid the situation that Murli is talking about, where Paytm is going around and asking banks to rescue them, and no one wants to touch this with a barge pole because they don't know what the extent of investigation is, if there is any mismanagement in KYCs, etc. Nobody really knows. So no one wants to take on that risk. What these people are arguing is that this is something that the regulator should have foreseen and maybe put someone in charge before pulling the rug from under Paytm. Having said that, if you see the letter, Hiral, it's quite aggressive because you're saying that the Paytm has done such a great job bringing digital innovation. So that is why you should review what the RBI has done. That's not quite fair because if you run afoul of the rules, then no matter what you've done in the past, you will be held accountable.
Absolutely, you will be held accountable if there are delinquencies that are found. But what's interesting to see over here is after these 3 consecutive sessions of lower circuits, today the stock is trading in the positive. Murli, does that tell you anything from a stock perspective?
Yeah, no, so that's slightly difficult to find out because we don't know where the bottom is. So today maybe some buyers would have emerged, therefore the circuit opened. But from a it's very difficult to say that, okay, this is a stock where you should go and buy at a particular level. Now, if you remember, in the past also this has happened. The stock hit lower circuit after some action was taken, and then some buyers emerged. After that, things gotten worse. Now, to get in at this stage is a bit of a risk. I don't know somebody must be doing some positional trading here.
Yeah, I think perhaps even this show of support from all of these startup founders would have sentimentally boosted the stock. I just want to add one more input of conversations I had with sources in the ministry. which is Meti, on how they are looking at this entire situation from a startup ecosystem point of view. And they were very clear, and they were also talking about what's happened with Byju's, etc., saying that you have to follow the rules. Another important point that came in is that if you're so convinced that wrong was done to you by the regulator, you always have the option of approaching courts. And you should do that instead of playing, quote unquote, the victim card. So a lot brewing in the story from every angle.
And one more thing I want to add over here is I think Bernstein was the one who called out a buy on dip, right? So I think that is something that probably people are looking at.
No, so we'll have to see how this whole thing plays out. You know, you will have a clear picture only after the 29th. Till then, you cannot take a very clear view whether it's on the stock or the business of Paytm. One thing that has emerged, Tamanna, is that it's an unsigned letter. I mean, the people who are lobbying against the RBI action, they don't want to put a name or face to this. You know, because they just don't want to be seen as associated and involved in this kind of a situation. So if somebody has got a very strong argument and they know that there is a strong case, why can't they come out? They are not. I don't know why they are hiding, and they are leaking this paper to the media. And we also want to say that, look, very clearly, this is an unsigned letter that has been sent out by all the so-called startups who are saying that, you know, fintech is big, that will come in the way of, you know, digital economy, and nothing will come in the way. If there is a wrongdoing, it's a wrongdoing.
I think it's also an extension of the lobbying that you're talking about, that Vijay Shekhar Sharma is not now doing. Of course, he's gone to the RBI, he's going to ask the regulator for some solution, but this is also sort of surround sound, building in a case for the larger ramifications. Having said that, the RBI will have to quickly come in with clarity, I'm assuming, on the 8th when the governor answers questions from journalists. This is going to be one, that how will you ensure that there is no fallout, no concern in the ecosystem at all with what's happened with PPB?
And I'm sure they will have to respond to it as well, because I think little over 60% is still owned by FIs, right? So an answer from the FI side will be sought very categorically from the regulator. And almost around 10 to 11 lakh retail investors who've now got trapped in this entire Paytm story, taking into consideration the IPO price from where they entered to where it is now until this actually gets resolved.
Yeah, no, see, it's not just the stock market angle. That's only one part of the story.
Absolutely.
You know, investors have to take risk with any investment that they do. Okay, so here it's not a question of saving the investors. Investors have taken a risk. They have put in money. There are investors who paid at the IPO over 2,000 rupees. Now, that's not the issue. The issue here is, you know, what will happen to the customers? Customers, will they have trust? I have heard, you know, cab drivers telling me that yahan petrol pump mein use nahi kar pa raha hu main, I could not use, main kya karu? Those kind of questions have started coming. And some people are also saying that they are shifting to other apps. Now, so I think what the RBI would do, and its intention is to clearly let people take out whatever balances that they have with the Paytm bank, and that's why they have given time till the end of this month.
So I think the development is going to be absolutely important for all of us to track from all angles,
right?
Because it's not only the legal part of it, but you know, even if you have to look at how much retailers' trust is broken, that part of it is also a bigger part of the story, because it's not only about Paytm. Then this extrapolates to a lot of other startups and that entire ecosystem, taking into consideration what you've spoken about.
I would argue not. That's the argument they're trying to make, Hiral. But frankly, not. Because if there is a concern, then you have to face it. It's like saying the Yes Bank case extrapolates to the entire banking system. No, it does not. There was a particular problem there that the regulator moved and swooped in to fix. And likewise, they're doing with Paytm's payment bank. Having said that, what they've done does not hinder day-to-day operations and use of the Paytm app. You can still Paytm Karo. So that's pretty much there. What has hit them is the reputational risk, which the markets seem to be reversing now.
Absolutely. Let's see where it ends up with once you get some bit of further clarification coming in. But 3.5% to 4% is the up move that we're seeing in today's session. Thank you, Murli. Thank you, Tamanna, for joining us on the show and getting us this detailed analysis of what's gone wrong, what happened when Vijay Shekhar Sharma actually met the regulator, and post that what others are thinking about it as well. But let's quickly slip into a short break. We'll get you lots more on the other side. Please stay tuned to NDTV Profit. Welcome back. We have Sharmila Joshi back with us. Sharmila, you heard my colleagues, discuss about Paytm and what's brewing and what's the latest information where we're picking up where Paytm has approached 3 private banks. However, they're not really keen at any transaction at this stage. What would you advise a Paytm investor? Firstly, someone who's invested, and secondly, is this time to really enter the stock?
So that's a difficult question to ask because, as you all were clearly outlining, there are just too many uncertainties at this point in time. And most of them are rather, I would say, unfortunate because, at the end of the day, this can also be viewed as a new economy versus old economy sort of a debate. Because, if you remember about a year and a half back, all these companies which had IPOs at that point in time, whether it was a Paytm, whether it was a Nykaa, Zomato, I mean, you name it. And, they were all viewed as new age businesses where growth was going to be exponential going ahead. And most of them have hit roadblocks for various reasons. This is, of course, a regulatory issue. But, I do think that some of this could have been avoided. And I think it would be greatly appreciated if we get clarity on the situation, largely because of, the number of users that are there with Paytm. And, in a way, they have become synonymous with fintech. So I would just basically advise people to investors to wait a bit. Yes, I think traders are sort of taking positional calls at this point in time. But I think if you give it a couple of days and if some sort of clarity emerges on this, then that could be a time to really take a position in the stock, because if then the sort of the door opens for private banks to come in, then I think that could be a possible way out and a road ahead for Paytm. So we need to wait and see how the regulators respond to this meeting, and what clarity emerges in the next couple of months.
That's going to be interesting to watch out for as well. Thank you, Sharmila, so much for joining us on the show, but we're completely running out of time. And before we call it a wrap on the show, we also caught up with the management of Orion Pro Solutions. Now, clearly, the company's revenues have gone up 9%, while margins have expanded as well. Let's hear a slice of that conversation.
We've been trying to build out what we've said is a global products and platforms business. Execution remains on track, as you saw in the quarter. Revenue grew 37% and profit after tax grew 45% or so for us overall. So that's broadly slightly ahead of the guidance of 30 to 35% that we have out there. Both of the major segments for us are growing pretty solidly. So the banking software business, both the lending software that we do as well as transaction banking, doing very, very well in the quarter. And on the technology innovation group that we have, the transit payments business, again, growing pretty solidly in the quarter. So overall, I think good all-round performance from each of the businesses.
and welcome to the Portfolio Manager. We have with us a very special guest, Prabhakar Kurwa, co-founder Samviti Capital, joining us. Samviti Capital has been one of the most outstanding performers in the PMS space, not just last year but since inception. Prabhakar, of course, joins us to talk to us about the investment philosophy, the assets that they manage, and of course sectors and stocks that they like and why they like them. Prabhakar, good afternoon. Thanks a ton for joining us today. You clearly are a hidden gem. I mean, Samviti Capital is a hidden gem. Performance of the fund has been exponential, to say the least, in the last 1 year, last 6 months, and even since inception, it's a clear beat with a 44% return versus the index of 19%. Talk to me, Prabhakar, about your investment philosophy to begin with.
Thank you so much for inviting me. The investment philosophy is slightly different from typically what the street does, right? So typically what happens is people generally, fund managers try to take a 3 to 5 year view of a particular stock or a particular sector, right? So what we do is slightly different. So we essentially are typically the core thesis for buying a stock is driven by valuations, or if a stock is undervalued or overvalued and so on. But what we do is we look at identifying some sort of an asymmetry starting to appear in the stock or the sector, right? So whenever we see that something that was neglected for a long time and suddenly a new catalyst has emerged in the picture, which we believe can change the trajectory of the company, we try to identify such stocks and build a basket of such bets. And instead of taking a 3 to 5 year view, typically our holding periods are relatively lesser. So we look at a transition period of 6 to 8 quarters, right, which is anywhere between 1.5 to 2.5 years, because based on our research, we've realized that most of the re-rating of a stock typically happens over a 6 to 8 quarter period, and that is what our average holding period is. But essentially, the key difference in philosophy is instead of taking a valuation-based approach or trying to find undervalued stock, what we look for is a neglected stock where a new catalyst has entered, which can materially change the earnings trajectory of the company. And that is what we have been doing, and so far we've been quite successful.
That sounds very interesting. I'm sure at this stage, when the markets are anyway looking so stretched and looking for themes, viewers would love to know